Hey guys, what's up? Alec back with the daily stock market, and look at that, another huge red day in the stock market. Yesterday was a red day as well. Unity down 9% and many other stocks down 5% or more. Today we're going to be going over a quick earnings update, but make sure you stay throughout the end of the video because we're going to go over one of the best deals in the stock market to be buying right now. We definitely had a beautiful day today in the stock market, up 90% just in one day, 55% overall. Apple puts 90% gain on the day. Lots of people were making money. Here we can even see the most beginner traders even making a nice profit, over $700 gains in one day. Same day purchase up 165%, $700, and the list goes on and on. Lots of students having success with the program, another one up 86%. So if you want to see some more success for yourself, click on success number 6, click on success number 5. Check out those programs where you can follow along with my exact trades, and you also learn to become a more advanced trader in the stock market yourself. Okay, so here's our earnings calendar. Monday already went by, Tuesday already went by, Wednesday is still yet to come. We have GameStop reporting after the close. That's a meme stock. It's going to be a very highly watched earnings. So if they drop big on earnings, you bet we're going to be covering it. So make sure you subscribe with post notifications on YouTube so you don't miss out on any GameStop updates. Thursday after the close is really the only other interesting day besides GameStop. We have Costco, we have Lululemon, DocuSign, and Chewy all reporting Thursday after the close. So Costco is a very interesting stock that we definitely have to do an update on. They're down 9% just in the past week leading up to earnings. And we can see in the past 3 months, they're down 7%, but we did see a big rally from their lows up 18%, which led them to fall after. Now we can see in the past year, Costco has been pretty good for option plays and swing trades. It's been following the resistance and the supports very easily, going down and up, very predictable on that pattern. Now, if we pull out to a 5-year chart, we see a symmetrical triangle, a bullish one. So overall, my personal opinion, I think that Costco will be at $600 per share once again. Could take 2 to 3 years. And in the next 12 months, 6 to 12 months, we could see Costco sell off tremendously and go under $300 per share. Now, in my personal opinion, I want to buy this one closer to $295 per share. So that's why I'll be setting a price alert. Now, that is very, very low for Costco to fall that far. So what I like to do, obviously, my biggest load zone is $295, but let's just set for $335 so we can get an alert faster and revisit Costco once they get to more attractive levels. As we scroll down, we can see the PE ratio is 37, implying it is a little bit overvalued. We can also see that this is a dividend stock with a 0.7 yield. And we can see that the 52-week high is closer to $600 with a market cap of $200 billion. Okay, as we scroll down, we can see that they are an extremely profitable company with their EPS above $2 per share, trending higher and higher and higher. And because the stock market really cares about beating profitability in the most profitable companies right now, there's a good chance that we won't even see Costco hitting those price alerts or those price targets around $335 per share. However, we don't have to own every single stock in the stock market. So if my price alert at $335 per share doesn't go off, then it's not the biggest deal in the world to me. My portfolio will be going on. All right, so let's go over the net income real quick. We see $3.2 billion in 2018, rising around 10 to 15% per year. We had 1 year where we saw a 25% rise in net income. And now in 2022, we see the net income closer to $6 billion. Okay, if we go over to total revenue, they aren't growing revenues by an extreme amount, but from 2018 to 2022, we've seen them grow about 80 billion in total revenue, which is a green check mark on total revenue and a green check mark on net income. As we scroll down, we can see that their balance sheet debt to assets is closer to 67%. We have a red X on the balance sheet because we want to see that debt to asset closer to 50%. Lower liabilities, higher assets. And if we look at what analysts have to say about Costco, we can see that there's a 14% upside on average. The highest analyst has $610 per share. The lowest analyst has a $450 price target on Costco. Remember, the price of Costco right now is $481. As we scroll down, we can see that this analyst segment of the video, we can definitely take this a little bit more seriously because in the last week we've had a lot of reiterations from top 5-star analysts, and we even have some top 25 analysts giving their 2 cents on Costco. Now, a lot of these 5-star analysts have above $550 per share in the next 12 months for Costco, which implies around a 15 to 20% gain on the stock price in the next 12 months. So overall, Costco is definitely more of a long-term trade, a long-term hold. We can see that it is consolidating right now. I want to see this closer to $335 or at least $350 per share, because if we see that rally up to $550 per share like the analysts are projecting, that's closer to a 60% gain if we're buying at $335 per share, compared to only a 15% gain if you're buying at $480 per share. So that's why you can see that $480 per share isn't super attractive to me, and I'm waiting on lower prices. But make sure you stick throughout this entire video, because the next stock that we're going to be talking about, I think, is going to be one of the best deals to be buying right now. However, first, we're going to be talking about Lululemon, ticker symbol LULU, which a lot of analysts are liking Lululemon right now. So let's dive in a little bit deeper and see what's going on. If they're a candidate of beating earnings, if they're a candidate for a long-term portfolio hold. We can see that they're at $370 per share, up 14% in the past month. In the past year, they are down 15%. And in the past 5 years, we've seen the stock with astronomical growth. As we scroll down, the PE ratio is 44, implying that it's even more overvalued than something like Costco right now. As we scroll down, the EPS is very profitable, typically with above $2 per share on their EPS, and they beat analyst expectations time and time again. The last 4 quarters were beats in a row, and there's a good chance that they're going to be beating on earnings again. Now, if we pull up their net income, we can see that they have been growing their net income faster than something like Costco, for example, growing at 50% per year, 30% per year, 65% per year. Now, we did see that they had a misstep in 2021, down 8%. So I probably would give Costco the edge on the net income overall, which is very important to be looking at with how the stock market is treating stocks right now. Profitability is very important. They still get a green check mark on their net income. If we go over to total revenue, we can see that they have been growing total revenue faster than something like a Costco as well, with 24%, 21%, 42% gains, growing from 2018 $2.4 billion in total revenue to $6.2 billion in 2022. Green check mark on total revenue. Their balance sheet is also better than Costco. They're below 50% on that debt to asset ratio, which gives them a green check mark on their balance sheet also. 2018, they had 20% debt to asset ratios, so it was even more attractive. We really, as we're paying attention to Lululemon, we really don't want to see that debt to asset ratio creeping higher and higher and higher as they keep growing. If they can keep their debt to asset ratio under 50% as they continue to grow, I think that'll be really impressive from the company. Now, analysts are mixed about Lululemon stock. Here we see on average a 10% upside to $408 per share. Currently, we have Lululemon sitting at $370 per share, and the lowest analyst has only a $200 price target in the next 12 months. As we scroll down, these were all just reiterated just a few days ago, and most of these are 5- and 4-star analysts. As we can see, most of the 5- and 4-star analysts are saying above $450 per share and closer to $500 per share. As we scroll down, we can see that most analysts have above a $400 price target. There's really only one analyst that's saying $200 per share for Lululemon in the next 12 months, and that's a 4-star analyst with only a 51 success rate and only a 4.8% average return. So definitely take that $200 prediction with a grain of salt. It would probably be closer to $350 per share for the lowest price target on an analyst. So for me, I have price alerts set at $305 per share, where we're going to be revisiting Lululemon. Personally, I want to be buying heavier around $275 per share. So once my $305 price target goes off, doesn't mean I'm going to be buying a bunch of shares then. We're going to revisit it, and then my real price target's closer to $275. So I filled you guys in with Costco price targets, with Lululemon price targets as well. Let's jump into one of my favorite stocks in the stock market right now for the price, which is ticker symbol AMZN at $88 per share. Okay, they're down 30% just in the past 3 months. Absolutely obliteration for such a big tech stock. Can you imagine if the S&P 500 was down 30% in the last 3 months, for example? This is such a big deal, in my opinion, that people aren't even realizing. 47% down on Amazon just in the past year. And from all-time highs, it's closer to 52%. Now, we are revisiting 2018 lows and 2019 lows, but closer to 2018 lows, where we've seen Amazon stock around $85 per share. And in 2018, we actually even saw Amazon above $100 per share in 2018. So that must mean that the revenue is probably the same around 2018. The net income is probably the same as 2018 as well. If the stock price is reflecting the same price as it was in 2018, the fundamentals, the net income, and the revenue should be the same, right? So that's how you find an undervalued stock. What you do is you pull up the fundamentals. We see net income, for example, in 2017, it was $2.2 billion. What do we see in 2021? We actually see that it's closer to 20 to 30 billion. So there's been a 10x in net income since 2017 compared to present day. Even if we go to quarterly, we can see that they have been making around 2.8 billion per quarter. So if the net income has 10x'd, then why hasn't the stock price 10x? If we pull out the total revenue, we can see in 2017 it was 170 billion. And in 2021, we see it's closer to 469 billion. So we saw around a 2 to 3x on total revenue, yet the share price is still the same as 2017. As we pull down to the balance sheet, we see very low assets, very high liabilities, with a 78% debt to asset ratio in 2017. Fast forward to current day, and that's only 67% debt to asset ratio, with assets that have grown tremendously since 2017. So in my personal opinion, Amazon is one of the best deals in the stock market right now to be buying at the current price of $88 per share. Anytime Amazon goes below $90 per share, I'm buying a little bit heavier, because I know that there'll be an easy swing trade above $100 per share and closer to $115 to $130 per share. So my personal goal on Amazon is around a 50% gain in the next 6 to 12 months. And in the next 24 months, I think that there's a strong possibility to see even 100% gain or more on Amazon. So thank you so much for all the love and support. I hope you guys enjoy when I take time out of my busy day to make these videos for you guys and give you my thoughts on stocks and let you guys know price alerts, where I'm buying at, and some of the best deals in the stock market at the current price. If you appreciate that, all I ask for is a like and subscribe on YouTube. Thank you guys for the love and support. If you want to join the close friends list, message me here on Instagram at the Daily Stock Market. Click on success number 6 if you want to see some of the positive success that people have been having in the group. Share this video with a friend, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.